Good morning and welcome to the Homestead CPA. My name is Dan Snyder. For those of you who have been with us before, welcome back. For those of you who are new, welcome. This is part 10 in a 15-part video series covering accounting, tax, and legal issues for homesteaders. Each one of these videos can be watched individually. You don't necessarily have to watch them in order, so any order is fine. And you can go back to them if you have a particular question or thought about a particular item that we cover. Today we're going to be talking about purchasing supplies. In part 9, we talked about purchasing capital assets and what a capital asset is. What is a supply or an expense? An expense is basically anything that isn't a capital asset. It's an item that you pay for that is not going to have a useful life of longer than 12 months. I mentioned chicken feed or electricity or water bills or cattle feed or any type of item that you buy that you use in your homesteading business that isn't going to last longer than 12 months. Now, the rules with respect to taking tax deductions, and these rules really cover all sorts of items. It's not just supplies, but it's important to know that you get a tax deduction for buying expenses when you pay for them. All individuals are on what's known as the cash basis, and so when you hand a check or cash to the seller, you're going to get a tax deduction then and there. So if on December 31st I go to the feed store and I buy feed and I pay for it, then I get a tax deduction. Well, what about a credit card? That comes up often because many of us use credit cards regularly in our business. When you purchase something using a credit card, it is tax deductible at the point in time you purchase it, not later when you pay the credit card. Why is that? It's because of the fact that when you use your credit card to purchase an item, effectively what you are doing legally is you are borrowing money from the credit card company. So it's like you borrowed money from the bank, put it in your bank account, paid cash for the item, and now you still have to pay back the bank. In this case, you have to pay back the credit card company. So your tax deduction is when you buy or purchase the item. It's not later when you pay your credit card bill. And it's important when you're keeping your records to ensure that you don't double count. We talked about this earlier in accounting issues. You don't want to take two deductions for the same item. So keeping track of your expenses, whether you paid for them by cash, check, or credit card, is very important. And then when you're recording those payments for the credit cards in your checking account, you want to pull that out as a non-deductible item because we've already taken a tax deduction for the rest of the items. So this is how the system works. When you take a deduction for items, you get the deduction in that year. There is one exception, and we mentioned this also in the prior video, and that is when you're buying an asset that is part of your inventory. If you buy a cow with the intention of selling it, let's say you're a feeder operation, you buy the cow, you feed it up over the summer with the hay that you've grown, and then you sell it in the fall or the winter, then you take the tax deduction at the point in time when you sell the cow. If you hold on to that cow because you think the market's going to go up in January or February, then you don't get a tax deduction for that cow in the year that you paid for it. You get the tax deduction in the following year. So these are things that you need to keep in mind. And this is why we get phone calls. We, your tax advisors, get phone calls in December, and they're all asking the same thing. Should I buy/pay for a particular item, or should I wait until next year? It's very important that you, if you have questions, that you do talk to your advisors and make sure that you're getting the maximum benefit for any of the purchases you might make. Thank you for joining us today. And as always, remember, even Jesus paid taxes.